Yeah, very nice to speak with you, Dan. You're right, it's been decelerating quite rapidly here, and I think probably even more so than the headline figures suggest. Shelter has been the one component of inflation that's really been stickiest here, but there are signs that's set to roll over as well. If you strip out the shelter component, inflation, headline inflation, is running at below 1% right now. And if you look at realized rents, you look at home prices, which have softened here, I think shelter is likely to follow. So I think inflation is probably falling off even a bit more than the headline figures suggest, although to your point, those have decelerated quite a bit already as well.
Okay, so pause post-July. What's your view?
I think a pause is warranted. You look at the state of the economy today, and it's growing okay, but not particularly fast. Inflation is clearly headed in the right direction, as we just mentioned. I can't see a strong case for continued hikes beyond July. But the Fed clearly has inflation on its mind. It wants to make sure that the market knows that it is firmly dedicated to getting that headline figure persistently down to where they want it. But I think whether we get one more hike, whether we get two more hikes, maybe even three, we're a lot closer to the end of this rate hike cycle than the beginning, quite clearly. And I think the market is already starting to look past however many rate hikes might be ahead. I don't frankly think it matters too much for the economy or too much for markets whether we get one or two or even three from here.
Okay, so that micro focus on the Fed is fading away. If that's the case, what's your preferred disinflation trade?
Yeah, well, I think that the environment that we're settling into here most likely is going to be one of much more modest inflation that we've seen, an economy that certainly has fared better than expectations, with such widespread recession fears. Even a slow-growing economy is exceeding those worst-case scenario concerns, but it's not a particularly fast-growing environment. And so I think you're going to continue to see an environment where investors are willing to pay up for good, quality, stable companies that can provide growth that isn't just purely tied to economic activity, because that's looking like it'll probably be lackluster. But I do think that trend of this market being led just by a few big companies, I think that probably broadens out here a bit. I expect smaller companies to start participating a bit more. Not that those big mega caps can't continue to do well, but I do expect leadership, some of the breadth in the market, to start broadening out a little bit. So it won't just be tech, it won't just be the very big mega caps. I think you're going to get more participation for the rest of this bull market, or for the rest of the market as the bull market continues.